Hey, welcome to the Mortgage Minute. Lots of stuff going on this week. First of all, OECD urges the Bank of Canada to hike interest rates. They're actually suggesting we should raise rates by 1.25% over the next consecutive 4 quarters. So basically, that's like a quarter-point rise every time the Bank of Canada meets. Just some notes here. Moves by the federal government to tighten mortgage lending rules are not doing enough to cool down the housing market in the hottest regions of the country, i.e. Vancouver, Toronto. The Organization for Economic Cooperation and Development said Tuesday this is an organization funded out of Paris. So people in Paris are saying, Canada, you need to raise your rates. Your real estate markets are too hot. Yet, in the same week, we see Vancouver real estate house prices swoon deep. And so, in other words, we're seeing a big drop in prices here in the Vancouver market. So what do you believe? It's hard to know which one to believe, okay? Bottom line is, I'm going to put my money on Mark Carney raising rates. You, as a real estate investor, as an individual buying real estate, need to start preparing for higher rates. It's just an inevitable. Hey, it was a great party while it lasted. And again, OECD urges the Bank of Canada to raise rates. So, other news, and this is something that's very disturbing for us. OSFI, which is the Office of Superintendent for Financial Institutions, okay, basically the bank regulator. They're the guys that are the watchdog watching over the banks and telling them what they should and shouldn't do. They're telling banks that you should take homeowners, look at their employment status when they requalify for a mortgage, and their income. In other words, when your mortgage comes up for renewal, we've all had for years, we just know, your mortgage is up for renewal, you renew it with the bank, you just move on. Now they're saying, no, let's take a look at the employment, see if they still have the job, see if they can still afford it, and may even ask for an appraisal. And I know that scares some of you who bought some investment properties in Alberta. So anyways, the Mortgage Broker Association of Canada, myself included, we're all fighting this because we all believe this is ridiculous. The government should be focusing on credit card companies, not mortgage companies. That's where the real issue lies, not with the banks right now, and not with low interest rates. But the bottom line is this, folks. We're seeing an environment where there are more pending rules, lots of pressure for an increase in rates, pressure for more rule changes. Today, more than ever before, it's important for you to have a plan. If you're a real estate investor, make sure that you have a strategic plan and you're building in contingencies for these events. You can't just sit there, throw mud against the wall and hope it all works out. You need to understand that these rates will increase, and when they do, how have you adjusted your business portfolio for that? That's one of the reasons, and one of the things, by the way, we're going to be covering in the 5-year plan workshop that's coming up June 4th. By the way, we have one more seat available. Somebody just couldn't make it because of flight plans changed. So there now is one seat available, so please send us an email for the June 4th 5-year action plan workshop. We'd love to see you here. And on a final note, I just want to let you know that we officially have just surpassed $1 billion in funded properties, $1 billion worth of real estate that we have financed for residential real estate investors in Canada. So it's a pretty big deal out of our office, Peter Kinch Mortgage Team, knowing that we've hit the $1 billion mark. But anyways, hopefully we can work with you in the future as well. That's the Mortgage Minute. Hope you're having a fantastic day, and go to peterkinch.com for more information. Thanks.